Welcome to Option Trades Today. I'm Tony the Bat Batista right here from downtown Chicago inside the Bat Studios. It's April 16th, 2024, and I've got a trade idea for you. But first, as we always do, let's take a look at the market. Even the S&Ps down $9.25. You can see they're just about, well, let's just call them mid-range for the day. NASDAQ is up 17. NASDAQ's been the strongest of the group all day long, kind of hanging in there today too. Russell down 11, and the Dow's actually been the strongest of the group with UNH coming out with good earnings. The stock was up around $30, $35. It's sold off a little bit now. It's only up $25. The Dow is up 73 points. It was up over 200 earlier today. Here's my perplexing thing. Volatility in by 45 cents, down 45 cents, trading near its lows, 1756. You can see here on the right-hand side that volatility has been expanding over the last couple of days, reaching new heights that we have not seen since December of last year. Sitting right now today at 1765, down 45 cents, sitting near its lows, even though the market is not anywhere near its lows on the day. Bonds down 10 ticks, 113.31, mid-range for the day. Bonds have been anemic, meaning they've been going lower in the market, not helping the market at all. Now, gold continues to rally. That would be the other kind of bad case for maybe a market coming back a little bit over the last 3 or 4 day sell-off we've seen. But there is an interesting thing here. You do have volatility expanding in ES, which is the same as SPY, which is the same as SPX. So let's take a look at our watch list here. And when we look at our watch list, you'll see at the top of the list here, SPX volatility up almost 3% over the last 5 days with an IV rank of 70. Obviously, no earnings are looming for any of these ETFs. As a matter of fact, I had it set here so that earnings would be taken out of the equation and put in order here. You could see last night you had UNH, Bank of America, and earlier or later today, tomorrow you'll have Las Vegas Sands. Today you'll have UAL after the market closes. And then you get Netflix and some of the other stocks that we like to trade, Tesla coming on the 23rd. So for that reason, I would like to avoid earnings as I always do. And I have a little bit of volatility play here since volatility has been selling off and not making new highs, even though even the S&Ps and the rest of the market were making lows. I'm going to go a little omnidirectional, and I'm going to go slightly bullish, and I'm going to use SPX. This is a trade that I put on last week that worked very nicely for me. I'm going to skew it and take a little bit more risk by going a little bit shorter dated than I did when I put this trade on last week. Let me show you a little bit of a trick here. I have all of the cycles opened right now, all of the option days, weekly option, daily options. If you click on this little funnel and go to regular expirations only, just because SPX is such a big product, I'm bringing in just the regular expiration options here. I'm not going to go to the 2 days. That would be too risky even for me. So it's between the 30 and the 65 days. If this was a stock that didn't have earnings, I would probably go down to the 65 days because we like to take these trades off with 21 days to expiration, put them on closest to 45. 30 to 65, with 45 being the middle, you're in no man's land. I always default to more time to be right than I would less time to be right. But I'm going to make an exception this time because of what the market has done. This is my, opinion. Your opinion might be different. If you're not omnidirectional, slightly bullish on the market with Jay Powell speaking later today, maybe he'll save the market, then this is not the trade for you because there is going to be a little bit of risk here, especially being shorter dated. What am I going to do? When I do an omnidirectional broker wing butterfly in SPX, I like to go around the 20-ish delta options. I'm going to go to the 38.40 options. I'm going to buy one of those. I like to risk two to make one. So I'm going to go $50 wide. I like to go down to the 47.90s. That's $50 wide. I'm going to do two of those. So I'm buying one, 38.40, selling two, 47.90. That's $50 wide. And then I'm going to go all the way down to the 46.90. That's $100 wide, and buy one of those. And that's why I'd be using around $5,000 in buying power, $4,760 minus the credit I'm receiving, around $2.45. And just like the last time I put on this trade, risking two to make one with almost a 90% pop only brings in around $2.50. So I'm going to take a little bit more risk, move this by $5, and I was able to get filled at $3.85 on this trade, using about $5,650 in buying power. I brought my probably profit from 90 down to 89. I get paid $11 in theta decay, and it is omnidirectional, slightly bullish, which means I better have long delta, and I do $2.31 of long delta. Remember, SPX is 10 times the size of SPY, so this is really 23 long deltas when beta weighted to SPY, so it is a directional bias trade here. My max profit is $4,860. Why? Well, I'm long this $50 wide put spread. And if everything went perfect, and by perfect I mean SPX actually went lower in a very slow fashion, and I kept this on for the next 30 days, and we expired right at $47.95, this trade would make $4,500 plus the $385 in credit that I received for the grand total of around $4,800 plus in profit. Now that is unreasonable, and I'm not looking to play for that either. What I'm looking for volatility to keep this market head above water. Jay Powell say something nice this afternoon, and maybe the market goes back to rallying ever so slightly for a short period of time. If you want to see this trade, not when you're watching this podcast, but anytime, go to the Tasty Trade platform, click on the follow page. You'll see, oh wow, two people already, my son and Jamal put on trades in SPX. Oh no, that's me, I'm sorry. Who looks like my son. That's Jamal and that's me. If you click on Bob the Trader, you'll see just my trades. Here's my trade from today. You'll notice that when I put this trade on, SPX was 50.47 and change. It's 50.54, and you can see how much that spread has moved already. It's moved by about 25 cents. That's just volatility contracting a little bit and getting a little bit of directional bias correct, meaning the market went a little bit higher. I always give you a little bit of a description here. I am going back to the well because you'll notice here on 4/11, I put on a very similar trade here with the same 90% pop that I was able to close. You'll notice right here at 12:48 and change, I was able to close about 2 hours and 50 minutes later, making myself a little bit of a buck. But you'll notice that I got the directional move that I wanted. It only took about a 40 to 50 handle move in SPX to get that dollar in credit. So you can see how much this trade can move in a short period of time. So it is not a trade for those who are not comfortable with the risk. It is an omnidirectional, shorter dated, broken wing butterfly with expanding IVR. All right, now's the time when I ask you to please open, move, transfer, bring your account to Tasty Trade. Not only seeing these trades, but helping us keep the lights on here. And if you open, move, or transfer an existing account, they're going to pay you for bringing your account up to $4,000, depending on how much equity you bring into Tasty Trade. And by equity, that could be futures, stock, options, any positions you have. You can bring them over in like kind and get started trading on the #1 platform in the galaxy.